Hello, and welcome to Virtual Investor Conferences. My name is Cecilia, and on behalf of OTC Markets, we're very pleased you've joined us for our next live presentation from Pacific Ridge Exploration. Before I introduce our speaker, please note you can submit your questions for the presenter in the question box to the left of the slides. Additionally, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Blaine Monahan, President, CEO, and Director of Pacific Ridge Exploration, which trades on the OTCQB venture market under the symbol PEXZF and on the TSXV under the symbol PEX. Welcome back, Blaine.
Always a pleasure. Thanks, Cecilia. Thanks for everyone that signed on to listen to my presentation. As Cecilia mentioned, my name is Blaine Monahan. I am the President and CEO of Pacific Ridge Exploration. Pacific Ridge, we are focused on copper gold porphyry projects in BC, and our goal is to become BC's leading copper gold exploration company. We pivoted to copper gold porphyry projects in January 2020 with the acquisition of Clayule and Redton from Centerra. Great timing. Copper was trading just slightly north of $2 a pound at that time. We had a very bullish outlook on copper, and we subsequently assembled a portfolio of high quality porphyry copper gold projects in BC. We've benefited from that tremendously. When I came on as CEO in January 2021, almost 2 years ago, we were trading at about 5 cents, had a market cap of about 1.5 million. Today we trade close to 30 cents, have a market cap approaching 25 million. And we've completed a number of significant drill programs at our flagship Clayule. We completed 7,000 meters there this year. That was the largest drill program ever. It more than doubles the amount of historical drilling that's taken place at Clayule. We've reported 6 holes so far, and the highlight hole thus far has been hole 41, which returned about 278 meters of 0.67 copper equivalent or 0.92 grams per ton gold equivalent. In addition, we optioned one of our projects, RDP, to Antofagasta, one of the world's largest copper miners. We drilled, they funded a 6-hole program there. We've reported 1 hole, and hole RDP 22005 returned 107 meters of 1.41 copper equivalent or over 2 grams per ton gold equivalent. So we had a very busy year, Pacific Ridge. It was actually the busiest year in Pacific Ridge's exploration history. And that goes back quite a ways. It was founded in 1979 by one of my mentors, John Brock. We also advanced 2 of our other projects, Onho and Chuchi, where we completed some ZTEM and surface sampling. And we're looking forward to launching an inaugural drill program at Chuchi next year. We just announced a $5 million bought deal financing. That ensures that we'll be able to launch another significant drill program at Clayule and an inaugural drill program at Chuchi. I anticipate that once that financing closes, we should have about $7 million in flow-through dollars to spend on Clayule and Chuchi next year. I talked a little bit about where Pacific Ridge was in January 2020 when we made the initial acquisition of Clayule, and copper was just trading slightly north of $2 a pound. The forecast for copper is tremendously bullish. And when you couple that with increased political, social, environmental risk in South America, we're seeing a lot more interest in these copper gold porphyry projects in BC. We're seeing acquisitions, we're seeing joint ventures, we're seeing strategic investments, and I think that will carry on into the future. A little bit about management and board. I mentioned that I came on in January 2021. I have a capital markets background. My forte is accessing and raising capital and generating interest and awareness, and that's worked out well for Pacific Ridge. I replaced Jerry Carlson as CEO. He remains exec chair, and he leads our very strong technical team, which is comprised of Danette Schwab and Paul Jago. Our board, from a corporate governance standpoint, is quite good. We have a 5-person board, and it's comprised largely of independents. Myself and Jerry are executives, management appointees to the board, and the 3 other appointees are independent. So it's majority independent. One of the key additions to the board several years ago was Borden Putnam. He has a lot of buy-side experience in the States and very strong technically. And at his behest, we created a technical committee. So not only are we very strong on the management side, we've created a technical committee that reviews our exploration plans, our theses for exploration. And so I know whenever the exploration plan has been put forward to this technical committee and approved, that has been very well thought out. And all I need to do is go out there and access the capital for them to execute. So where are we today? You can see our 52-week stock chart. It's been very volatile out there. Really, I look at April 1 as the sort of beginning of the downturn for junior miners. We've vastly outperformed our peers in that time, and largely that was just by remaining flat. So while we're flat in that time period, a lot of our peers are down anywhere from 40 to 60%. And a very good reason for that is because we've been very busy. We raised $7.4 million in the spring. We announced that 7,000 meter drill program at Clayul. We announced that Antofagasta was going to be funding a 1,500 meter drill program at RDP. And we also announced exploration programs at our other projects like Chuchi and Onho. So in short, there were just a lot more good reasons to own the stock than to sell it. We are beginning to see the news come in now. We have reported the first 6 drill holes from Clayul, and I mentioned that highlight hole. We've reported 1 drill hole from RDP. In the new year, I would expect to see the remaining 6 holes from Clayul, the remaining 5 holes from RDP. So there's a lot more news to come. And I'm very hopeful that the remaining 6 holes from Clayul will enable us to go back and approach our 52-week highs. As far as ownership, it's quite well balanced. We have good funded institutional ownership. Our largest shareholder is Crescat, approaching 19.9% on a partially diluted basis. Delphi, a German fund, owns about 14% on a partially diluted basis. A number of other smaller funds and institutions in Canada, the US, and Europe own 6%. Management and former management, 9%, and the balance being retail. So we're pretty pleased with that ownership. Something I would like to see added to that ownership structure would be a corporate strategic investor. We have been speaking to a lot of various corporates, and I'm hopeful that we will be able to secure a strategic investment sometime in the future. As far as analyst coverage goes, we only have one firm covering us right now, M Partners, and they have a target price of 65 cents. But again, as time moves on, I'm hoping we'll see additional analyst coverage. So where are we? All of our projects are located in north central BC in the Quesnel Trough. This is a prolific porphyry district that extends all the way from north central BC down to the US border. There are a number of producing porphyry mines in this trough. The closest one to us is Mount Milligan to the south. But if we start at the north, we have Benchmark. We have the Joy District, where Freeport has to spend $110 million to acquire 70% interest. Then we have Chemist North, which is at the feasibility stage. Chemist South, which was an open pit copper gold porphyry mine, which was mined out. And we're just about 50 kilometers south of that. One of the benefits of the, I'll call it the Chemist complex, is that infrastructure is quite good here. And we're just about 5 kilometers off road and power that served Chemist to the north. To the west, about 40 kilometers to the west of Clayul, is RDP. That was one of the reasons why we really liked RDP. We acquired RDP last year. And one of the reasons we acquired it was because of its proximity to Clayul. It meant that while we were advancing Clayul, we could easily or more easily advance RDP at the same time. And that's exactly what we did last year. So while we were drilling Clayul, we were also the operator from RDP, and we supported that drill program at RDP from the Clayul camp. So it was a shared camp, and then we were just helicoptering people back and forth each day. To the south, we have Redton, which is immediately adjacent to Quanika's, Northwest Copper's Quanika. To the south, we have Chuchi, where we just announced some ZTEM results. We've identified some new porphyry targets, and we will look to launch an inaugural drill program there next year. And just to the south of Chuchi, we have Onho, which is only about 15 kilometers to the west of Mount Milligan. So where are we? Well, for Clayul anyways, we're looking west here, and what we're just sort of showing is that the Clayul is in the Alpine, it's in a saddle. Very easy topography up there. It's about 1,750 meters in elevation. So right now it is helicopter access only. So we have a shortened exploration season that runs from about June to the end of September. And if we look down to the bottom right, you can see that Omanika Mining Road and Power, which is what I mentioned, travels to the north to Chemis. So what we do right now, we move heavy goods up along that road. We stage at Johansen Lake. Then we helicopter everything up into that valley where we maintain a camp. One of the other advantages where we're staging from, there's also an airstrip. So we move our personnel, we fly them from Smithers to Johansen Lake, which is only about an hour and a half flight, which is a lot shorter and safer than driving 8 hours along a forestry road. So Clio, there were lots of reasons why we liked it. I mentioned that Pacific Ridge was taken public by one of my mentors, John Brock, in 1979. Historically, it's had a focus on early stage gold projects in the Yukon. In 2018, we decided that it was perhaps time to think about a different commodity, a different jurisdiction, something more advanced stage. We were quite bullish on copper. We're very familiar with BC, and we came across Clio. So we like Clio because obviously it's a copper gold porphyry project. It had returned historically some drill intercepts that we considered economic. So it really fit the bill. And when we look at what had taken place there in the past, it had seen only a limited amount of drilling, 5,500 meters and 33 drill holes. And most of that drilling was quite shallow. But there were a few holes that got into the porphyry. And the first hole that was drilled that got into the porphyry was drilled pretty late in 2006. So that's when the porphyry potential was really identified. And then that program in 2006, you only saw 2 holes. Then Teck had an option on it in 2015. They drilled 4 more holes. So when we acquired this project, or the option to acquire a 75% interest from Centerra in January 2020, it had only seen 5,500 meters and 33 drill holes. So a limited amount of drilling. We launched our first ever drill program there in 2021, a pretty small drill program, but very successful in that every drill hole returned significant widths of copper gold porphyry mineralization and better than what we had seen historically. That set the stage for a much bigger drill program this year. We completed 12 holes in 7,000 meters. And as I mentioned, that more than doubled the amount of drilling that had taken place at Clio. It was the largest ever drill program there, and very successful in that every drill hole intersected porphyry mineralization. We've returned or reported the first 6 drill holes, and hole 41 would have been the best hole amongst those 6. But it was very successful in that we were able to expand the mineralized footprint, and now we're waiting for the remaining 6 holes that included a number of significant step outs. And that was really the goal for this year's exploration program. I believe this has the grades, and I do have a subsequent slide that will show you how this rates against some other similar deposits and mines in BC. Now it's just a question of scale. Can we demonstrate that this has size potential? And I'm hopeful that the results from the remaining 6 holes will demonstrate that, and again, set the stage for an even bigger drill program next year. So I'm showing the results from the 2021 drill program first. So just 3 holes, but important that mineralization is starting at surface. All the holes ended in mineralization, and these were some of the best results to date. Holes 36 and 37 were the 2 best holes, and hole 41, which we just reported, is now the 3rd best hole. It was better than hole 38. And we talk about that here again. So here are the results from the first 6 holes that we completed at Clio this year. They were drilled within an area we call the Clio main zone, and you'll see a slide of that. We pushed across to the north of the fault. We pushed across, which is called the Valley Fault, and we pushed to the west. And this was really important. We increased the size of the footprint to about 550 meters by 200 meters to 600 meters in depth. So it's getting a lot bigger with a limited amount of drilling. And more importantly, we demonstrated that these faults do not constrain mineralization. So it still remains open in all directions. This is a slide I was talking about when we compare the grades to some of these other similar deposits and mines in BC. And what gives me confidence that something like this in this environment can work if we can demonstrate it has the size potential. So when we look at the hole that Geoinformatics drilled in 2006, that better hole that Teck drilled in 2015, the results of our 3 holes from last that we returned this year, when we look at the copper values and we compare them to these other similar deposits and mines, it compares favorably. When we look at the gold values, it has higher gold values. So overall, a higher copper equivalent or a higher gold equivalent. So it gives me confidence that these sort of grades in this sort of environment work if we can continue to report similar intercepts and grades. And now what we need to show is that it has the size potential. And I think this slide also demonstrates what is that target? What is the minimum tonnage you are looking for here in this sort of environment that would give you confidence that this could work? And for me, when I look at the tonnages for these other deposits and mines, it gives me a minimum target that we're looking for is 250 million tons. We believe that's the minimum amount of tonnage for a project like this with these sort of grades and these sort of environments to work, as long as you are able to cover off a lot of the other potential risks. So what does that look like as far as dimensions go? I already talked about that so far our drilling has, outlined a mineralized area of about 550 meters by 200 meters to 600 meters in depth. So what does 250 million tons look like? Well, it's not that much bigger. It's about 600 meters by 400 meters to 400 meters in depth, or, you can move those numbers around, but we're getting there. And that's what we're really trying to show in this year's program, is that it does have that size potential. We're not going to be close to getting out a resource anytime soon. It's really a matter of just demonstrating that the size potential is there. So the first 6 holes we drilled were all collared within the Clyoe main zone. We did drill across to the north. We did drill across to the west, across the Louis Fault. And now we're waiting for the remaining 6 holes that included some big step outs. And basically, we can see one of them here. We're seeing East Wedge. And basically, that's collared just south of the Divide Lake Fault. And it crosses through the Divide Lake Fault and terminates just north of the Valley Fault. That is really about a 300-meter step out from the Clyoe main zone. And then, of course, further to the east, you have the Clyoe East target, and to the west, you have the Clyoe West. So all in all, this year's drill program tested 1.5 kilometers of the Valley Fault trend. And now, if we're to hit mineralized or sufficient mineralization in all of those holes, it's going to be very easy to start waving your arms around saying, yes, it absolutely has the size potential. But I think it's just necessary to hit sufficient mineralization in any one of those step outs, because that would add several hundred meters to the potential strike. And now we're just looking at a cross section here. So we're getting some tremendous vertical extent. As I mentioned, we are pushing out across the Valley Fault, which in the past, historic operators felt constrained mineralization. That is not the case. And it doesn't appear to be the case to the west across the Louis Fault either. So the Clyoe main zone remains open in all directions. That's something we will continue to look to test moving forward. But of course, the Clyoe main zone is just one target area here at Clyoe. It's a 60 square kilometer long project. Clyoe main zone has seen the most amount of drilling. There are a number of other targets that occur along a 6 kilometer long mineralized trend called the Divide Lake Fault. And that starts down in the southeast corner, and it goes up to the northwest and ends at Ginger. So in addition to the drill program this year at Clyoe main zone, we also completed an airborne survey over that 6 kilometer long mineralized trend. We also did some deeper penetrating IP over M39 and Bapp Ridge and Parish Hill and Ginger. We think these are very compelling targets, and we think that for a number of reasons. Porphyries do tend to occur in clusters. The Clyoe main zone, I think, absolutely has the potential to meet that sort of size target we're looking for. But a lot of these other targets have seen only 1 or 2 holes or no drilling at all. And in exploration, it's really important not to just put your blinders on and just keep going back to one particular area. You do need to test other targets, and that's something we'll look to do this year. So with a minimum 7 million in flow through dollars we have to spend next year, I would look to budget a minimum of $5 million for Clyoul, and that would equate to about 7,000 meters of drilling. So I would look to say, well, let's put about at present 5,000 meters of the Clyoul main zone and reserve 2,000 meters for testing some of these other targets. It's really important to do that, and my case study for that is Saddle North, GT Gold Saddle North, which was acquired by Newmont for over $400 million just several years ago. GT Gold was having some pretty good success at a target called Saddle South, and they ultimately decided to test a new target called Saddle North. And that resulted in a discovery where they were able to outline almost 1 billion tons in copper gold mineralization. So again, just because you're having success in one area doesn't mean you should ignore some of the other targets, because there's a potential there for additional mineralization that could be as good, if not better. So that's kind of high level Clyoul. One of the other important things is that we do have exploration agreements in place with local First Nations. We meet with them regularly. We were just there in Prince George several weeks ago. We'll be up there again in January. Very important to maintain positive relationships, and I think we do have very good relationships. Clyoul is located in the Quesnel Trough. It's a prolific mining belt, and we look at the intervals so far. I mean, these are all pretty significant intervals of porphyry copper gold mineralization, and obviously we're looking for more of that in the remaining 6 holes. It is in a similar environment, and it's reporting comparable grades to a lot of these other copper gold porphyry deposits and mines in BC. We have expanded the size. It does remain open, and now obviously we're waiting on the remaining 6 holes that included some of those significant step outs. And if we can hit in any one of those big step outs, it's going to make it a lot easier to argue that this absolutely has size potential. I'm going to close out with RDP. As I mentioned, RDP, we acquired this project last year. Lots of reasons why we liked it again. Historically, it returned some very good numbers. And because of its proximity to Clyoul, it meant that we could advance both simultaneously. And that's exactly what we did last year. The last time this project was drilled was in 2011. And that would be the hole from Roy, which was EQ11-1. Very interesting numbers. Those are numbers you'd certainly want to follow up on. And I know that they had planned to get back there in 2012, but at that time, the bear market was upon us. There was no more capital available for them to further advance this project. So the drill program that was funded by Antofagasta this year is the first time this project had been drilled since 2011. And the results that came out were fantastic. They were better than the drill results we returned from Clyoul last year. It's the best hole we've ever have seen from RDP, and it's one of the better holes we've seen come out of BC this year. So we're very encouraged by this one hole. We do have a number of other holes to report, and I would expect to see those sometime early in the new year. What we're waiting for now is that we have optioned this project out to Antofagasta. They're in the process of looking for additional funding for a bigger drill program next year. So we're waiting to hear on the decision from them whether to proceed with a bigger drill program, and we should hear about that over the coming weeks and months. Oh, Chuchi. Yeah, last but not least, Chuchi. So we acquired Chuchi this year from Centerra. We did complete a ZTEM survey this year and some soil sampling and mapping. We have identified a number of new copper gold porphyry targets, and that the BP zone, where most of the historical drilling has taken place, looks like it has room to expand. So we're going to be allocating $2 million for exploration at Chuchi this year, which will include an inaugural drill program. So we'll be starting that permitting process soon, and we look forward to getting in there. And again, you can look at some of the historical results that have been returned. I mean, Chuchi arguably is more advanced than Clyoul. It's seen more drilling, about 90 drill holes, and most of them quite shallow and ending in mineralization. And when you look at some of these historical results, very encouraging. So certainly nothing to sneeze at. And we'd be looking to get back there this year, testing some new targets, but also looking to further explore the BP zone. And that's about it. So Pacific Ridge, we've moved very aggressively. We identified the copper opportunity a number of years ago, and since then we've amassed a portfolio of high quality porphyry copper gold projects in BC that I think are going to continue to be very much of interest to copper gold mining companies looking for exposure to BC. We had a very busy year. We have a number of results still to report, and I'm expecting that next year will be even busier than this year. Thank you. So now what I will do, I will turn it over to questions. And I'll look at this one moment. First question. What are your key takeaways from recent CLIOL? I imagine for the recent CLIOL program. The takeaways are important ones. One, the most important one is that it's open. It remains open in all directions. The faults do not constrain mineralization. So now we're waiting for the results from the remaining 6 holes. But I think we've come to understand CLIOL a lot better. You have to remember that it was our first ever drill program there last year. This year was an even bigger drill program. But I think that valley fault is very important. When you look at that, the valley fault as a trend, and you compare it to some of these other trends that exist at some of these other deposits and mines, I think there's a lot of potential along that 2-kilometer long valley fault trend. Next question. When would you think about doing metallurgical testing at CLIOL? That's something we're discussing now. There's also some other studies that we're looking at. And you'll forgive me, I'm forgetting the name, but these are ongoing discussions as far as looking at either metallurgy or another test. Yes, so here's another question. Can you provide some more color on your 2023 flow-through financing? Yes, so we announced a 5 million bought deal flow-through financing with Red Cloud. It's priced at 32 cents. They do have the option to go to 6 million, and I do suspect that will happen. So I believe that we'll be getting 6 million in flow-through dollars to be spent on exploration for next year, and we have a remaining 1 million in flow-through in the treasury right now. So we'll have 7 million right now at a minimum to spend on exploration next year. And as I said, we'd be looking at the present time, if no additional capital was raised, you'd have 7 million in flow through to spend on exploration. And I'd be budgeting approximately 5 million for CLIOL and 2 million for Chuchi. Next question. What are your 2023 milestones? Related to what I said, we'd be looking to get back to CLIOL, looking to continue to extend the strike extent along the Valley Fault, and testing some of these other targets that we further refined this year, and an inaugural drill program at Chuchi. And I don't see any more questions, so if maybe I'll just give people 10 more seconds if anybody wants to fire through another quick question. Otherwise, I'll get off air here, so I'll count down. Okay, that looks like that's it. If anybody has any questions, please don't hesitate to reach out. You can give me a call. You can send me an email. I work for you, so please let me know if you have any questions. And other than that, happy holidays, everyone. And I look forward to reporting additional drill results from CLIOL and RDP